What's going on, everybody? Welcome back to another YouTube video. I just wanted to show you guys that we have passed the trading combine for the week. Everything was shown out in the server. If you wanted to join the server at discord.gg/leverage, where is the 1% Academy, where we do mentor students to find freedom themselves. But understanding here that we have passed the account, where I want to go ahead and show you guys everything as far as start to finish, from trades taken, my strategy during, how I was able to pass this account in just 3 days, and how you guys will be able to do the same. So starting it off here, we're just going to go ahead and read some of this here. We understand that we have hit the profit target. You guys can see at the top that we did pass the account. We can start the express funded account now. 50K trading combined reset. We can also see here that we only traded 3 days. Our average winning day was around $1,000, and our win rate here was about 92%. So everything you guys see in the title is true. Nothing is a lie as far as that goes. And that's exactly what you will find over there in the server as well. Everything is shown out. We do live trading as well. So if you guys want to be able to do that, go ahead and do that. But we passed the account in those 3 days. Did a very, very good average here. You guys can see the contracts down here as well. We will be starting that express funded account next week. So I'm very, very excited to do that. Now let's go ahead and jump into the trades that were taken, how you guys can be able to figure out and look for the same, and how you guys can see that. So upon showing that to you guys, showing you it was only in 3 days, we're going to go ahead and start it off here. This was Wednesday that we had started, that I was looking to trade. I took 3 trades on Wednesday. I took about 2 trades on Thursday and 2 trades on Friday. So I'll go ahead and show you guys everything. But first thing is first, let's go ahead and get into the strategy. Alrighty, so first thing is first, let's go over my main 3 components of my trading strategy, which is going to be Wyckoff, supply and demand, and market structure. Always starting off with our market structure, we do first our top-down analysis. So let's put that down, top-down analysis, which is looking at market structure from higher time frames to lower time frames. So focus on figuring out your direction on a higher time frame bias, and then figuring it out on a lower time frame bias. Your higher time frame bias is going to show the moral of the story. Your lower time frame bias is going to be the pages in between. So that will allow you to figure out your directional bias, and then from there you can use supply and demand and Wyckoff to figure out your theory as far as where price is going. So following that, you're going to use your time-based liquidity rate, which is going to be your Wyckoff theory behind manipulation, to allow you to figure out if you're in a reaccumulation or a redistribution. There is a reason I only trade those Tuesday, Wednesday, Thursdays, and sometimes Fridays, because those are going to be more continuations than they will be reversals. Now, from there, I'm going to be looking for a break of structure in the given direction of my higher time frame bias. And from there, you can look for that area of now supply and demand to be able to get your entry upon. Now, after you figure out your area of supply and demand for entry, you will go ahead and target your opposing liquidity and premium and discount. We're going to show an example with just drawing it, and then we will show examples with actually taking the trades in just a second. So let's go ahead and do that first. Now, before we do that, I do want to mention that notice how this is a system of steps, waiting for your top-down analysis, your time-based liquidity rate, a break of structure, your supply and demand area for entry, and then targeting your opposing liquidity in premium or discount. This is not a single pattern. This is not just using a Wyckoff pattern. This is not just using a supply and demand pattern. This is not just using a market structure pattern. More confluence will equal more conviction, which will allow you to comfortably trade over and over again and repeat this system. Mentefex said this great way, right? He said that if you are on a plane, right, and you are trying to drive the or fly the plane, and you are a pilot, are you just going to go up there and just click 1 or 2 buttons and then take off? No, you need to click every single button to ensure that you can be able to take off, aka get into the trade before you do so, right? This is a business. So if those steps are not met, no trade will be taken. If it does not show up, then there is no trade that will be taken for that specific day, for that specific time. Now let's move on to the drawing examples. All right, so starting off here, let's pretend we are in a higher time frame bearish trend. So this red represents our H4 bearish structure. We have an H4 area of supply that we are looking for price to come up, create a lower high, and continue to the downside. Now, let's say on my specific session, we come into the market, we have a move to the downside, and now H1 is showing some sort of bullish structure. So what we can do is figure out our area of premium and discount within that structure. So we will draw it out just like this. We have an area of premium. We have an area of discount as well. If I am on my H1 chart and we get a break of structure to the upside, like we can see right here, price is creating higher highs and higher lows. We will look for that break of structure to the upside, look for your H1 area of demand, and then look to seek that long trade into that area of premium. Even though it may be bearish on the higher time frame trend, we can use our lower time frame trend to be able to figure out where price can go for that specific day at that specific time based on what it is already showing us. This is something that we don't have to predict. We don't have to wait till it comes back to H4 supply to be able to take a trade to the downside. Instead, we can use our higher time frames and our lower time frames together to be able to figure out how fractal markets work and use that to be able to find that long trade to the upside into that area of premium, targeting maybe some equal highs, some areas of imbalance right before that supply to allow us to get into those trades day after day. So we wait for our first top-down analysis from H4 to H1. We wait for that time-based liquidity raid. Here is your liquidity raid with price taking out that higher time frame low. We wait for a break of structure. Here is that break of structure that we can see right here. We wait for that area of supply and demand for entry. One thing I forgot to mention, for supply and demand, I use what is called the candle before candle, otherwise known as the flow block. So candle before candle that broke structure and left an imbalance. And you guys will be able to see this as well when I go over it with the actual examples from us passing the account this week. So we can see that we waited for that liquidity raid, waited for that break of structure, waited for our area of supply and demand, and then we targeted that opposing liquidity, so those equal highs, maybe an area of imbalance as well, within premium of that range. Because it is bullish, we are looking to again sell it overall, but we can see that price is showing that H1 bullish structure to allow us to be able to take it into this area of liquidity. Now, on the opposite example, let's say we came into the market and price was around here at this time. Again, we're looking for the same thing over and over again. So we do our top-down analysis. We notice it's coming into that H4 area of supply. We look for H1 and we wait for first that liquidity raid. So we get that tap into it and we get a raid of that high. Then a break of structure. Here is your break of structure to the downside. Area of supply that is created, which we can see right here. And then now you have that availability to enter that trade. And even if you wanted, hold it for those full lows that we can see. So if it allows me to do a short trade here, just weird. But we'll be able to show that lower high that is created and then look for that full lower low following that. So H4 supply into that H1 supply, still top-down analysis, still a liquidity raid, still a break of structure, still an area of supply and demand for entry, and then we can target that opposing liquidity and premium or discount. In this case, it would be back into discount of this entire range. Even if you wanted, you could hold it for that full low as well, as it is just a low, lower high, and lower low overall. But to understand that sometimes it may not make that full move, again, we're just targeting some lower R. We're looking for those base hits and looking to compound those over time. So this is exactly what I use to be able to figure out where price is going, when it is going. This can be shown as institutional concepts. People have called it smart money concepts as well, but this is just my spin-off of it. I'll talk about my MLC in later videos, as well as my candle before candle in later videos. They will be in the strategy series as well, or you guys can see them in the Discord. I do have a course available in that Discord as well. So go ahead and join discord.gg/leverage. I will link it down below as well. So you guys will be able to see that if you wanted to join. But now let's go ahead and get into the actual examples from this week. All right, so I have broken down each and every day here. We have Wednesday with a 6.5R, Thursday with a 6.75R, and Friday with a plus 4R. We're going to go over each and every day, exactly how I use my strategy to be able to get in and out of these trades. And we will show you these trades as well on the server when they were taken to allow you guys to see what we actually do in the 1% Academy. It is real raw trading. So let's go ahead and get into Wednesday. All right, so starting off with Wednesday here, I first want to point out that I always wait till after 9:30 a.m. New York time to be able to take my trades. We look for a liquidity rate and a break of structure following that. Now, this one I was a little bit later, so I traded more PM session as far as today goes, but I was able to look for first that time-based liquidity rate. Where was that liquidity rate? Here is your liquidity rate. I first had an area of supply that was disproven. I'll talk about my disproval theory in my strategy series as well, but we got a break of structure to the upside, a show of demand right here, and then price came back down. And then on the 1 minute chart that you guys can see right here, I will go ahead and show you this as well. On the 1 minute chart, the same exact structure is forming. So on a higher time frame, we got a break of structure. We got some imbalance that was formed. Price came up, created a high, a low, another higher high. As it's coming back down into that area of demand, we again wait for another break of structure on lower time frames. Here is your break of structure, just right here. Candle before candle that broke structure that I deem as the flow block. This can be again seen in my Discord server if you guys want to join. But we have that flow block that is created, and then we are targeting that opposing liquidity. I have a fixed R of around 2 to 3R as far as this evaluation goes. So that's exactly what I was looking for here. Nothing more than that 3R mark. We got close to it with about 4R on this specific trade. 3.87R was taken. I was really targeting this high right here. Price came down, tapped into my zone. I took the trade, about a 30-point stop loss, and then took it up into the highs. That allowed me to risk a little bit more with 2 contracts, as I only had about a $180 loss on that if it were to stop me out. Never stopped me out, moved into that high, and then continued. Now from here, as we're following structure, we can see we created that high, higher low, higher high. So now I look for, again, that same exact thing, liquidity rate within discount of the range. Here is your liquidity rate with price taking out that low, and then we wait for that break of structure to occur. Where is your break of structure? Right here. So as you can see, it is coming back down into that range, low, high, lower low, and then we get a lower high and then a higher high that occurs, right? When it came down into the next higher low, that's when I took the trade, targeting now that higher high. So opposing liquidity again, looking for that weak high as it did not cause a new low, and that will allow us to continue to get into that next trade. That's exactly what I did a little bit later in PM session, and then I targeted that next high right there. That spread was able to get me out at around a 2.81, so it was a very, very beautiful day as far as Wednesday goes. But that's exactly what we look for every single time. And notice the behavior, right? It doesn't look exactly the same every single time, but the behavior shows every single time. Liquidity rate, break a structure, candle before candle. Liquidity rate, break a structure, candle before candle on lower time frames. Same thing over and over and over again. Looking to catch those continuations versus looking to catch those reversals. It keeps it a lot easier for you guys. Now, from there, moving on to Thursday now, the first trade again was taken after 9:30. So we got our 9:30 liquidity rate to the upside, break of structure to the downside, candle before candle that caused that. Trade was taken just right there at 2.15R, and I targeted again that opposing liquidity within discount of the range. So we took out that previous Tuesday low, or sorry, I think it was, yeah, the Wednesday low, and that allowed us to be able to take that short trade. Now we are waiting. Now we are waiting. We have our area of supply that is formed, right? This previous area right here. But notice what happens to structure here. We get a low and then we get a higher high. Okay, maybe it's just a liquidity rate. It will continue to the downside. Instead, it does not, right? So it creates that higher low and now pushes above previous highs. And after doing so, you now have again break of structure to the upside right here. Candle before candle that caused that. Price moves right into that. That's where I caught that entry. And then I targeted again opposing liquidity to the upside right here. So just these small little 2R trades were adding up. We were able to get that 6R on this day. Now again, waiting for the same exact thing. Price comes back down, creates a higher low, moves into a higher high, higher low, and then we get that continuation. This is where I took that trade again. We got a push up, higher low occurred right here. So another break of structure, candle before candle, and then I took it again into that opposing liquidity to the upside within premium of the range again. If I show you guys this on a higher time frame, so a 15-minute, Let's move that over real quick. We can see that that target was within that imbalance within premium of the range. We were not looking for this full high right here. We were just looking for that area in premium. That was that opposing liquidity that was within the range, right? This allows you to just take those trades to those specific areas day by day and not have to catch an entire move for you to be able to profit. We can see how we stacked those base hits on that specific day. So that was that 15-minute chart right there. That was Thursday. We got a beautiful, beautiful session there with that short moving then into the long. That is that disapproval theory where we can catch both shorts and longs just by adapting to the market. But now let's go ahead and move into Friday. All right, so now we are on to Friday. This one was a little bit different as we had CPI that day. This is that CPI candle at 8:30. Sorry, actually, this was an NFP candle at 8:30 right here. So after NFP had shown up, we got a break of structure to the downside. I came into the charts around 9 o'clock, waited for a liquidity raid into a previous imbalance, and then took it into a low that we can see right here. So price came down and took out that low, a little 2R trade on that one with that liquidity raid area of supply, and then price moving back down lower. Later in the session, you guys will see this long right here as well. I did almost pass it at this one. I was already over 53K at this point, but because of the consistency target with the first couple days making too much, I needed to make $125 over. So that is what I did over here, waiting for again price to show higher highs, higher lows, higher highs, higher lows, breaking structure to the upside. That's where I took the trade and then just targeted that opposing liquidity right here. So I was able to get out on that candle, a little 4R day on that specific day, and I was able to pass the account from that. So remember, again, that this is a system. This is not just pattern trading. We are looking for base hits over home runs, and we are looking to compound, 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 right? I could have taken just one trade, maybe something over here, held it all the way into this high and passed the account, but does that show consistency? No, that is just one specific trade, right? We need something that we can do over and over again to be able to repeat it for the long term. That is how you make that business and make it true to yourself to be able to be comfortable trading that system over and over again. And you guys can see, we showed you on the top step thing in the beginning that it was only 3 days of trading, right? Only 3 days during a week where we had NFP, we had a bunch of news as well. But you can use this to be able to figure out behavior of how price is moving at all times and just target what is already there instead of trying to make up something or predict something that isn't even there yet. So with that said, I am now showing you guys the journal. This is something that you guys should be doing as all traders. Journal your trades. This will allow you to show yourselves where you are messing up, where you are doing good, and what to continue off of, right? So this is all the trades that we have taken. We have the trading view screenshots right here as well. We can see the R gathered, but the biggest thing that we need to look for here is our R overall. We showed 6R plus 6R plus that 4R, so that equals that 16.2R overall. I'm not sure why it says 87.5 when Top Step is saying 92%, but oh yes, I didn't do the last one there. But at the end of the day, we did a very, very good job on this eval account. We will continue to keep going and get these payouts. Now let's go ahead and show that top step just one more time here. So again, we can see that we passed the trading combine. We only did it in 3 days. We only did it with around 8 trades total. So we can see total trades here, 2.67. So 6 and then 4 on top of that. So around actually 10 trades. Oh no, that was the average. So 4, so 8 trades total, 4 plus 4 equals 8 trades total. That was just the average. So 2.678 day. Average losing trade was about 500. Average winning trade was about 500 as well. So a 92% win rate, only a 1.1 risk reward ratio, right? We don't have to go for those home runs to be able to pass these accounts in a little bit of time. We did this in 3 days, just going for those 2-to-1s, those 3-to-1s as well. And that allowed us to be able to stack those base hits, show that over time, and be able to get into that. So with that said, thank you to everybody who watched this video all the way through the end. Please, if you found value, go ahead and like and subscribe. If you want to join the private mentorship where we hold live trading streams every single Tuesday through Thursday, we hold weekly reviews, we hold weekly sentiments for our MVPs, we hold homework streams as well. Go ahead and join that discord.gg/leverage or click the link below in description. That is where I will send the WAP links for you guys to be able to purchase it. Also, if you want the journal template, feel free to add me on Discord at 1xflow so I can send you the journal template. I do not add first. You have to add me first, and then I will be able to send it to you. Also, check out that Beginning to Profitable series as well as that strategy series for more on the YouTube channel. All you have to do is click it and then look into the playlist section, and you guys will be able to see that. We just started a new strategy series, and we are almost finished with the Beginning to Profitable series. So this will be more information for you guys to get into trading, for you to do the same exact thing that we have done here. We have over 100 plus live trading videos upon joining that mentorship as well. I have a whole private playlist set out for those guys with over 100 plus videos of us doing those weekly homework streams, weekly sentiment streams, everything that we had talked about before. So again, thank you to everybody who watched today. I hope you guys found value. I hope this helped you out and helped you out as far as your mentality goes for taking these evaluations. These are not hard to do if you follow your rules, follow your system, and continue to stay consistent. So thank you again to everybody who watched today. I hope you have a great rest of your day and or night, and I will catch you guys on the next one. Peace out, everybody.